Hello viewers, welcome to Forex Flow weekly analysis for March 30th to April 3rd. In this video, I'll be talking about very good trade setups for the coming week. Before we start, be sure to subscribe to my channel and hit the bell icon so you can continue to get these videos. Here on the screen, we are looking at Euro USD. We're looking at the daily chart here. And we ended last week here around 106 to 106.50. But if we go a week before that, here around this area, I gave a signal to sell Euro USD, and the expectation was that the price would go down to 109.50 with extension to 109, and we were also saying that it may dip down further to 108. I think that was very accurate forecast, and if you had taken a sell trade around this area, you should have made a lot of profit. And there was an extra bonus here. Actually, the price dipped down to 107, also with extension to 106.50. So that was very profitable trade. And I was not able to do a video last week, but if you have been following me for quite some time, you would notice that how I trade, how I give forecast, and based on that, you should be able to take a buy trade around this area. And I tell you why, because we always talk about these huge red candles, and after that we talk about the price bouncing from here. So we saw that the price dipped down here, it bounced, the next day it dipped down here, bounced back, and then we saw this green candle with a lot of buying pressure here. So the price was heading upward. This was your entry point to enter into a buy trade. If you had taken this buy trade around 107 or 108, you would have made a lot of profit here as well on the bounce back when the price is heading back upward now. So currently it's sitting at around 111.32, and we are expecting that the price would go up in the coming week. There is a lot of volatility in the market, so there's really not a good way to identify the trend right now. These indicators may not be valid. As you can see, the price barely respect these moving averages, or looking at the RSI, sometime it stays above 80 for quite a long time, sometime it goes below 20. So you have to look at the market sentiment, also look at the US dollar index, and you have to look at the fundamentals in this situation. Currently, there's a lot of fear in the market in regards to coronavirus situation, as well as there are a lot of jobless claims filed last week, and we saw that the dollar index dipped down from 102 to 98, and this bounce is coming in regards to that. For Euro USD is very tightly bound to USD index. So as you can see here on Friday, we didn't see much profit taken. It looks like the price closed very close to the highs, and we expect the price to go up from here. In the coming week, we'll be looking forward to this moving average, which is this red line around 110, and if the price comes down here around 20-day moving average, which is currently sitting at 110.60, and the 50-day moving average around 110, if the price dips down around this area, you can enter into a buy trade. If the price goes up here, it may open up with gap. In that case, you can sell this pair and let the gap close. If you are already a buyer and you're holding your position, you don't have to do anything. You can just hold your position, lock your profit around these moving averages, and wait for the price to go up. If the price goes down with the gap, opens up with a gap, and it start going down, and as soon as it closes the gap and you see there's bounce back or the price is reversing now, then you can enter into a buy trade. In that case, I think 4-hour charts are very effective. If you look at 4-hour chart here, this is exactly what I'm talking about. The price is going up here now. If it opens up with a gap and it comes down here, and then you see the price is again bouncing back or making a reversal candle, green candle, then you can enter into a buy trade. If you are a buyer, you can hold it, you can lock your trades around these moving averages around 110 area, and then wait for the price to go up. The expectation is that if the US dollar index goes further down because of the current situation, if there are more jobless claims, the euro will be in more demand and USD will be weaker against that, and we'll expect the price will go up. The target currently is 112.50. That's our first target. If the price continues to go up, then it may go back up all the way here, back to this previous high of 115. That's the target. In the coming week, we'll be looking forward to that. If the price goes sideways, you can still lock your profit and wait for the price action, and it can go up from there. If the price start going down, then if you have locked your profit, you can take your profit, and in that case you don't have to enter into a buy or sell trade. Wait for the price action. If it breaks below these moving averages, you can certainly enter into a sell trade, but at the same time you have to look at the dollar index. If it's going up, in that case you can enter into a sell trade and then wait for the price to go down here, make a double bottom here. In that case we'll enter into a sell trade, and our target would be 109 with extension to 108. If the price bounces from here, we'll be entering into a buy trade and wait for the price to go up to 112.50 with extension to 114 all the way up to 115. That's for Euro USD. Now we're looking at Pound USD. Again, here this was a huge opportunity to enter into a sell trade. I gave signal that the price may dip down to 120 a couple of weeks ago, and that was a great opportunity to make about 600-700 pips of profit. Although we have seen it dipped further down another 500 points and went down to almost 114. That was not expected, but you can expect that in current situation when the markets are too volatile and investors are taking money out of the stocks and investing into these currencies or commodities. So in that case, we have seen that the price had dipped down here. Again, similar pattern like Euro USD, we have seen this area of support. So this is a new support area we have seen here, this green rectangle, and we have seen the price bounce from here. And it bounced a couple of days, it went down again, then it bounced with this strong green candle, which is closing above all these 3 days previous highs. So that's a very bullish sign, and you can expect that this is now your entry point around 117.40 or 117.50, and then the price has been going up. Now it's closed around 124.50, so that was almost 600-700 pips of opportunity that a lot of traders would have taken that. Now here we can expect this to continue to go up, although there may be a little bit resistance with these moving averages coming down. They may push the price downward or it may go sideways, but our initial target, if you are a buyer, you enter around 120, 122, 123. You can hold and lock your profit, wait for the price to go up. If it breaks above these moving averages, which is most likely, it can go all the way up here to 127.50. That's where you can take your initial profit. If it continues to go up, certainly you can extend your profits, and the target in that case would be around 130. That's for Pound USD. Now we are looking at USDCAD. This is a little bit tricky. This pair has been going up since the oil price broke below $40 a barrel, and we have seen that price was going up. At the same time, US dollar index was also going up, so this was a very bullish trend, and a lot of traders had made a lot of money here. I gave a signal to sell this around 145 if the oil price bounces back, and that's exactly what we have seen when the price bounced back around $25 all the way to $28. We have seen that the selling pressure came here. At the same time, the US dollar index was going down, so we have seen this double top here. If you look at the line chart, you will notice that it's making this M pattern, and that's very popular in Forex trading. I've been given signals like this in the past as well. Whenever there is an opportunity like this, you can always enter into a sell trade, let the price go down. You set your stop loss at the top of the previous candle of the previous high. So this was supposed to be a lock around 145.63, and it would never go above that, so the price was going down, and this was again a great opportunity to make about 500 pips. Now for the coming week, this pair can be very volatile based on the oil price around $22 a barrel. US index is falling down, so if US index goes down, this pair will go down. At the same time, if the oil price goes up and US index goes down, then this can go back. It can even break these moving averages, and it can go back around 134, 135 level as it used to be in the past. But if you see the US index is going down, but the oil price is also going down at the same time, then this can stay within this range. Currently what we have here between these two orange lines, you can see that the price may dip down here around 50, and it can bounce back as it will get the support from these moving averages coming up. And if your US index is going down, then this can go further down, but with the oil price going up, this can break below that. On the other hand, if the US index start going up around 97, it's currently at 98, but if it bounces around 97, 96, then this pair can bounce back from here. From this orange line, it can go back up here. In that case, we'll be looking forward to this target around 142 initially with extension to 144, and it can go back in the coming weeks. It can go back up here to 145. But it's all related to the overall situation right now we have in the world and the oil price and the US index. So this pair is very volatile. Recently, it can continue to be like this. You have to watch very closely the fundamentals. At the same time, look at the US index and the oil price. That's for USDCAD. Now we're looking at gold. Here we have seen that a lot of selling was happening in the past, but now US index going down with a lot of jobless claims filed last week, around 3.3 million. That was a very big number in the history of United States. So that's where the USD was very weak, and a lot of people in that case invest into commodities like gold, silver, and other commodities. That's the buying pressure we have seen. People are selling stocks, people are taking money out of Forex and investing into gold as a safe haven. And that's a bounce we have seen here from 1470. This was the target when I gave signal around here to sell, and then we said it can bounce from this previous support around 1470 to 1475. And that was your entry point to enter into a buy trade, and we have seen the vertical move upward with a lot of buying pressure, and it has gone up almost 150 pips. So this is the area where we have seen a little bit resistance in the past as well, and currently we are seeing that there is some sideways movement going on, but this can make a bullish flag in the coming days, and then it can go next leg up to 1700. In that case, it can even break above $1,700. So watch it carefully. If you are a buyer, I would say lock your profit around 1560 to 1600 and let the price go up. If you're not a buyer yet, you can wait for the price action and see if it makes the next leg move upward. In that case, you can enter into a buy trade with strong green candle on daily chart. That's for gold. Here now we're looking at crude oil. This has been going sideways now between these two orange lines. This is the range now around $21 and $26.50 or $27. This is the range we have seen the price is going sideways. There's plenty of oil in the market now, mainly because OPEC is producing too much, Russia, and at the same time there is very less demand in the market. So we can expect the price to go sideways. It can even break below this. If it breaks below that, then our next target would be around $17.50, maybe $18, and that's the area where we'll be looking forward to enter into a buy trade. If your RSI is below 20, it can quickly bounce back from there. $20 is psychological bottom right now, but it can break below that, and it can quickly bounce back at the same time. So we can expect the price to dip down, and we can take a buy trade and wait for the price to go up. In that case, our initial target would be $24 to $25 a barrel, and with that we can reanalyze this pair in the coming weeks. But for the coming week, you can look for this opportunity. If it does not break below this orange line around $21, then it can bounce back from here. In that case also, you can look for the solid green candle with a lot of buying pressure and wait for the price to go up. You can enter into a buy trade. If it breaks below, dip below that, then that's another opportunity for you to enter into a buy trade. There is no sell opportunity right now. If you're not a seller around this area or around $30 a barrel right now, it's too risky to enter into a sell trade. It can bounce back anytime, but you can look for the price even if it dips down. I would not recommend you to enter into a sell trade. Wait for the price to go down and make a solid green candle or a hammer, then enter into a buy trade at that time. So with that, I'm going to close. Thank you for watching. Do subscribe to my channel and leave your feedback in the comment section.